Okay, good morning, good afternoon, good evening. Welcome, welcome. So, let's see what we got today. First of all, Happy New Month. Second of all, British pound, Japanese yen is back. It was in a kind of hibernation. I don't blame it anyway. Look at it. So, first thing I want to talk about right now is the concept I call the cycle method. Okay, cycle method. What is this about? It's very simple. The cycle method is paying respect to, for instance, if a movement goes up, and let's say this is the last structural low, and it takes out that last structural low, no matter what it does here, and comes back, it tends to mirror this move going up, tends to mirror it coming down. In most cases, it's supposed to just mirror it faster if it is in a what? Downtrend. You understand? If it's in a downtrend. This time it did not mirror it as fast as expected because of what I was discussing about. That though we're in a downtrend here, we're also within an uptrend. Let me show you. Look at it. This majestic uptrend contained, this majestic uptrend contained in this downtrend. This trend kind of allocation you're seeing that I'm describing uptrend, downtrend was gotten from the higher time frames. So what I try to do is to simplify it so that it won't be difficult to understand. Okay, I try to simplify it. So the first method is a cycle method, which simply tells us that if a market goes upwards and it takes out the last market structural low, it tends to mirror it coming down. And as you can see, the same thing occurred. The same thing occurred in the sense that this was the last structural low. Once price took it out, I just knew that no matter what happens, it's going to first of all, it's going to come to this our support. If you watch the video for yesterday, the live um, training, I said something. First of all, that around this location you can start securing some profits. Then you leave the runner, and exactly as we the forecast we gave around that location as well. What did price do? Simple. It reacted from there. Okay, now to keep things very simple, I could start explaining why price reacted from here or even here, exactly to the T from here. Why did that price start reacting? It's very simple. Okay, but in order to keep this video very summarized, I'm going to be as simple as possible and also as quickly as possible. In order to keep the video short, that's what I'm trying to say, not summarize. We'll look at it this way. This is my original take profit. And I always don't forget this take profit that comes from the change of structure. And most times, if you've been following my trade forecast, whenever price hits my take profit, one of two things would occur. It will start retracing from there to your structural support equals resistance before it dumps again. It did not fulfill the all righteousness here. It was here it fulfilled it. And what happened? It went to look at support with turn resistance. Where did it turn resistance? Here. This long week you're seeing is, I will come to that, but that is simply market manipulation. Okay, not your broker, not anything, just market manipulation. Sometimes things like this happen, especially when people are trying to force price to do opposite what it's supposed to do. Okay, so this just occurred. So if you check it, technically this week is not even supposed to go above this zone. It's supposed to stop anywhere within this neck and come down. But Gigi has been acting very strange these 2 days. He's been a bad boy. But as you can see, resistance and what? A dump. Okay. And immediately reached here, this had given us our confirmed 1 hour. But if you watch the forecast for yesterday, I said this is my official take profit, and kaboom, it just smacked down. This is what I've known GJ for, this movement. Like putting eyes on a furnace is just crazy. Okay. Look at it. Boom. It just bang dropped. So this is what I expected. Now the second method I want to introduce before exhaust everything on GJ is the mirror effect. Mirror effect. Okay. Now what is the mirror effect? I'll I will explain it in this way. Let me zoom in. I'll explain it this way. I talked about it in some previous video. I'm going to talk about it now, to rehash what we've already done, just like a reminder. Look at what occurred. Look at the general price action, not just the time it occurred now. Let's just look at it generally. Price dipped. By the way, I'm using the 1 hour time frame. It can occur on any time frame because it operates on the principle of what? Fractals. What happens on one time frame happens on every time frame. It's just like the onion effect. Okay. So that one is another concept, onion effect. Some people call it fractal, but I try to keep it very simple. Onion effect. So this mirror effect is price dipped, okay, did not hit our take profit and gave us this week, the nipple week. Watch the forecast for yesterday so you understand the nipple week concept. What happened yesterday? This was day for yesterday. Now the mirror effect is whatever price has done the day before, there is a high probability that it could repeat that price action, that it could just repeat that thing that occurred. It dipped, it did not hit at take profit, it came up. I did not draw anything different. So because of the concept of mirror effect, whatever stop loss you wanted to keep here, you have to extend it above a little bit, which is why my stop loss is supposed to be here. I shifted it above, somewhere here, and it's checked it did not hit my stop loss for the trade yesterday, because I just had that belief that whatever occurred here the day before, to me, when I was trading this yesterday, this was my day before this was my yesterday, and this was my today. But in hindsight, this is yesterday, this is the day before this day. Okay, this is one trading day, this is another trading day. If you check the date, 29, 30, this is another day, this is one other day. So this is exactly what just played out, as very simple as it is. So it dipped, went up, gave me the nipple week. Oh, that was really bloody. GJ was really messing with messing with the ideology that price is not supposed to take out the high unless it wants to change structure. So it took me out using the nipple week effect. Okay, took me out. Now we're discussing the mirror effect. Okay, took me out, and what did he do next? Dip, take out, then he did not do anything, then we banked our 1 hour. Yesterday, what did he do? Dip, potential takeout, look at it, very close to the stop loss, and what did he do? Banked. This is another new low. This is the high now. This one now, it came up again the same day, the same day. Then what happened? Banked, it dropped. This is just the same day. So if we were trading Asian, this is our potential what? Our entry will be below this structure. Stop loss will be here in order to write it down. So this is the mirror effect I'm talking about. I think we've discussed the cycle method. Now we discuss the mirror effect. Okay. Now that GJ is printing the normal price action everyone knows it for, it has already dipped. Okay. So we are not just going to rush and say, oh, price is dipping, let me enter. No. Price has dipped. What we need to wait for is for it to do what? Give us some retracement. Okay. And we can take it down to retest the low. Okay, this is just a simple market structure design, just a simple structural design or structure design. There are complex ones whereby price could dip like this. Okay, give me my set 1 plus divider, give me my set 2 before coming down, just as if it's doing the M effect. Okay, this is another concept. Then there's another concept of retracement, but this particular method just keeps repeating itself. You understand? This method here keeps repeating itself. What do I mean? Instead of I could take my sell around here, but I would know that this demand order block could influence price to retest the high before it does what? It drops. If it that is if the trend fails to drop, this is where we now talk of trend continuation failure. This normal trend now is supposed to do what? This is a counter trend, go up. If it fails to go up, trend continuation failure, it drops in the overall trend. But if it goes up, then we'll be talking of a different concept. Okay, let me put it this way. The overall trend is down, and this set 1, S1, S2 is a counter trend, which I normally like taking this counter trend. I've been observing it for years, and I just feel like, though I was never taking it, I just stayed away from counter trend until I understood how to trade it. Then I started taking it confidently. I wouldn't advise you just start taking counter trend. Always go with the overall trend. So what you do is, a simple concept here is, first of all, know the direction of the market, which is something you have to be doing every morning. If you find it difficult identifying the direction of market, simply come to the YouTube channels and see the direction of the market so that you have a confident bias. Okay. Then I just want to keep it simple. After you've discovered the direction of the market, these other concepts are very important. You need to know your entry strategy, where you want to enter, where you want to place your stop loss, and where you want to place your take profit. If it's in a bearish market, the same way if it's in a bullish market. After you've done that, you've known your entry strategy, you've known your exit strategy in case of a loss, you've known your exit strategy in case of a profit. Okay, they are quite different exit strategies. For me, based on my experience, if I know already my entry strategy, I've placed my stop loss, I've placed my take profit, I just go and just observe the trend or the chart play out, price play out without touching anything, because I've shown you, if you watch all the series, you'll see where I showed you where tampering with the stop loss could not be good in the long run, because it will change your psychology, which we want to protect at all costs, because market psychology is the brain box of trading. Okay, if you allow the market mess with your psychology, you over time become not confident with what you're doing. And confidence is criteria. Confidence comes with you being robotic, zero emotions, executing trade like that without a second thought because it meets your strategy, all the criteria you have put down on your strategy. So this is just the little concept I want to as in push out today. I believe this is mountain, this is first day of the month. So let's spice some new concepts into it instead of just going straight to discussing the market. Okay. So now we have discussed the cycle effect, as in we've discussed as in the cycle method, we've discussed the mirror effect. We've also chipped in the different retracement methods now, and we've talked about what we want to see here. I want to see some retracement, then break of the structure, we want to take sell to retest the low, and definitely this is going to keep dropping. Okay, this is what I've been waiting for a very long time, and all this sluggish nature was just going on, all this sluggishness was just going on. Now that has occurred, let us see how far we can ride this bull, and in this case the bear. You don't ride it anyway, you run beside it. Let's see how far it can run. Okay, this is for British pound, Japanese yen. um let's look at gold. Yep, gold. Gold is just doing as anticipated, just beautiful. A roller coaster, okay? Yeah, you remember the forecast I gave. Get a break below this, you anticipate a sell, kaboom. Exactly. In fact, it was here. I think this was it. That if we get a break and close below here, we'll anticipate a sell. But not on the 1 hour time frame. I like dropping to the 15 minutes time frame for gold, because gold is very erratic. You want to take it at the slightest, quickest opportunity. And what is the slightest, quickest opportunity? This is it. Here. This was the candle that broke and closed below. Our sell could be below here or on the break of the low. Stop loss above the correct candle. This is a different strategy. Like I tell you, you have to adapt to the market, not the market adapting to you. Okay, but this strategy is quite unique. If you want to do my overall strategy of taking a trade below the structure, stop loss above, and see it right, you will still hit your 1 hour, that is for sure. Okay, this is a different strategy. Now if you look very closely, you will see the mirror effect. Yesterday you will notice the mirror effect. What's the mirror effect? This is exactly the kind of trade that occurred. A rally, some consolidation, another phase of rally, then kaboom. It did not actually hit the support that very time, right? Watch this. A rally, some consolidation, not on this side now, but the same process, some consolidation, and what? Kaboom. It did not actually hit the support. It's just mirroring the mirror effect. Then it retraced and started moving sluggishly until it came down. Then in this part, it retraced, it started moving sluggishly until it came down. It's just the mirror effect. Price tends to just dish the food to you. It's you that you have to show the appreciation by taking it and absorbing the goodness of the meal. Okay, so what I'm looking at generally after I've explained the mirror effect on gold is that I'm looking for potential sells. It's as simple as that. Break of the structure, stop loss above the structure, 1 hour. If I want to take buys, I want buys to occur anywhere above, okay, this particular structural low in order to take buys up. But the buys, I have to go to a higher time frame to see what I'm looking at. Oh, this has dipped. So if it's coming up, that buy you see me show is a counter trend buy. Yeah, this buy here is a counter trend buy. That means you're taking a counter trend buy. If not, in general, we are in seller's territory. Okay. Um, Let me shift this here. If not, in general, we're in seller's territory. So what I'm looking at is just this simple concept of price could retrace, drop. This is scenario 1, or just continue dropping. This is scenario 1B. This is scenario 1A. If price comes above this guy, then we're anticipating some deeper retracement. This is scenario 2. It's just as simple as that. This is it. Okay. Let's look at Bitcoin. Bitcoin is dipping further. Bitcoin is just dipping further. It came though as low as the 18,000 series. Then it came up. What I'm looking at on Bitcoin is quite interesting. If you follow the forecast for yesterday, you realize two things showed here. The cycle method. Okay. Then I said a break and close below this structural low will indicate further dipping. Now for you to do that, you have to go to a lower time frame in order to find that. Where is it? Here. This is the candle that broke and closed below it. Okay. Entry on the break of the low of the current candle, stop loss above the structure, and what? Kaboom. It's as simple as that. All you have to do is come every morning on the channel, see the forecast, and just do it. Just place the trade. Because if you have any question you don't get, understand it, you feel free to ask questions. I'm here for you. Now for this particular structure, as you can see, this on the 1 hour time frame, we're in the buyer's territory. This will be considered the retracement. Until price goes below this guy, we'll be looking for buys to retest this high. So if it does like this, whatever it does, we'll do what? Take buys to retest this high. If it comes below this guy, let's say something of this nature, we'll be looking for sales to dump. It's as simple as this. Okay. I hope you understand what I'm trying to explain here, because I have tried to simplify it. However, on the 4 hour time frame, this is another craziness. On the 4 hour time frame, this particular candle could mirror this bullish candle and just drop. This is another thing on the 4 hour time frame. So it depends on how you're looking at it. We are saying the same thing. Okay, it could mirror it coming down. So the 4 hour time frame will tell you what the 1 hour time frame is shy to say, which is this could dip very low. If at all it wants to come up, it could dip lower, but it should not take out this low. If it takes out this low, then there's possibility of it to do what? Dip further. Okay, but in the 1 hour, you see that price should do what? Retest this high. That's why you see that price could give a wick on the 4 hours and then dip. That wick that it gives is just a retest of the high. So that is what we have on British pound, Japanese yen, gold, and Bitcoin for you this morning. I hope you enjoyed it, you learned something. Don't forget to subscribe, hit that notification button, and comment and like. You see, price is doing what we anticipated. It's just as simple as that. Okay, see you next time when we publish something. Happy weekend. Bye for now.